Martin, welcome to the podcast.
Thank you. Thank you.
Good to see you. So your company is called Sky.Garden, and we're going to get into what that is. But I'm interviewing you in Denmark. You're about to pack up and head to Nairobi with your family. But I'm always interested in, when an expat founder gets involved in an Africa startup, kind of what was the story that led you to an interest in investing in or launching a business in Africa? So could you give us the sort of abridged version of that?
Absolutely. I'll try to. And it's actually it's a very long story, and then there's the short model, of the short version. But I've been working for a decade and a half or so before founding Sky.Garden within management consultancy, advertising, and then lastly I was heading up global tech at a pretty big Danish company called Carlsberg. So it's a brewery.
I've had it a few times.
I guess you've probably had.
Yeah.
So yeah, I was traveling quite a lot with Carlsberg in Asia, and I was really amazed about how some of the markets out there they leapfrogged from industrial societies to directly into the digital age with technology over 5 to 10 years. And at the same time, we struggled at Carlsberg immensely with the one brewery that we had on the continent, and actually ended up shutting it down and not understanding distribution, payment, and the market. Um, and and then this is where the long story becomes short. One of my vendors, Christian Grubeck, today now my co-founder, he called me and had this idea about stripping down e-commerce to the basics. So how can you take away all the fancy stuff of e-commerce and apply it as business business rules to businesses that normally don't access and are able to reap the benefits of e-commerce. And at that time, back to the ideas I had about things not working in Africa and what I saw happening in Asia, I said, great, then let's do something, and let's do it in Africa. I had been in safari at Kenya 25 years ago, and he had never been south of Europe. So I think people thought we were idiots, but
Well, that's only true if you prove them right? So
that is correct. No, and again, then of course we looked at we did quite a lot of research, and quickly recognized that either we could go in from the east or from the west. Nigeria is a monster, and I think from people who's entered Nigeria, we also quickly realized that you don't want to enter Nigeria underfunded. So we looked at Ghana, we looked at Kenya. So that's where the bigger tech corporations were at that point of time. Looked at where we could access talent, where we could work with governments that are more eager to play with startups than other governments. So I think, and then at the end, Kenya was also from a time zone perspective, it made sense for us.
Okay, so, and I know your founding team is yourself and your original partner from Denmark, and then there's two Kenyan founders. And so, how did you connect with them, and how did that team get formed?
Yeah, I think from day one we knew that if we were ever gonna solve a local problem, we couldn't be arrogant enough to think we could actually solve it from the north. I think the mindset we had from day one was that we should bring in some experience from European e-commerce, and then find some really talented local guys where we could build the company with them, and then build it from the ground and up. So today we are, I think, 37 people on the payroll, and Christian and myself are the only ones non-Kenyan. The rest are operating out of our Kenyan office in Nairobi. Okay. And so am I in 10 days from now.
Soon enough, yeah. Okay, so let's kind of get into the details of Sky.Garden. Could you give? I've written about it on the newsletter. You had a funding round recently, which I want to get to. But what is sort of the fundamental business? What are the pain points you're trying to address? What was the missing thing that you're trying to create with Sky.Garden?
Yes, I think when we did our market research back in 2016, we quickly understood that e-commerce in sub-Saharan Africa really was catering or built for the large brands and for the higher net individuals who could buy quality brands. And there wasn't really anything built for the smaller retailers who had lots of stock but couldn't access the online economy, nor really for the mass market or the consumer mass market. I think at that point of time, trust was really something that hadn't been built in e-commerce in the market. So what we really looked at was how could we build growth technology for the SMEs? How could we build a distribution model that was safe and secure, and where we made sure that if anything broke in the ecosystem, then at least the consumers would get their money back, and we would hold them or basically hold them safe. And then finally, how could we work with digital payments that is somewhat different from the digital payments that we know from the West, right? Mm-hmm. So really also understanding that the payment infrastructure is run by, I don't know how much I should go into the differences, but there are some fundamental differences in e-commerce in SSA compared to the West, at least, and that is the mobile money operators being right. The big fintechs or the financial institutions, right? And just because you don't have postal offices not working doesn't mean that you don't have an extreme agility in distribution. So you have the boda networks being the motorbikes waiting on every street corner to pick something or someone up, so that we also quickly localize these guys as a massive opportunity. And then building it all in one platform. Now called Sky.Garden.
There's several piece parts to this. I want to kind of get to them, and we'll sort of do an abridged rundown of all of them. But let's start with the boda networks. That's your distribution. When you first looked at how are we going to solve the distribution piece, what was your original? Was your original idea to use that network, or did you originally think you had to create your own infrastructure? How did you get to that decision? Yeah. It seems like a unique piece of what you do is how you tap into those existing distribution networks.
Exactly. I think the initial idea, and that's also still very much part of our strategy, is that we don't want to be a completely asset-light model. So we don't want to own our own fleet. We don't want to touch the money. We don't want to warehouse any products. So it's basically applying technology on top of how business is done. I think one of the Achilles heels of being not necessarily a first mover, but being early on tech in a greenfield market of opportunity is that you have to build everything yourself, more or less, right? Mm-hmm. And this is where the distribution part is a central key for a platform, as you said, where we both are building capabilities for the boda companies to tap into our technology if they are not tech enabled. But also now with the large investments in the distribution sector, so Sandy raised, I think, 25 million last year, and it's quite a lot of investment going into the boda companies right now. Mm-hmm. These guys are also becoming heavy tech enabled now, and now we're seeing more of partnerships in tech rather than us building technology towards them.
More integration than
exactly. Yeah, exactly.
Interesting. Okay. Yeah, I know. There's companies like Safe Boda out there that are growing pretty rapidly, expanding into different markets, etc.
Amni Truck, Get Boda, yeah, lots of them. Yeah.
Right. So let's talk about the merchant. You kind of mentioned a few use cases, but let's talk about what is if it exists, what is your typical merchant is it a retail seller who wants to extend into e-commerce? Is it a pure e-commerce player? All of the above, and kind of range of size. Just give us a feeling for who uses this platform, and then what they had, and was this replacing anything, or was this their original e-commerce play?
Yeah. I think the sellers or the merchants that we built the platform for was based on the notion that the informal economy in SSA is so massive. So I think in Kenya it's 80% of the economy which is being driven by the informal sector. So we always, with a smile, say that we've built Sky.Garden for the guys with a side hustle. So everybody has a side hustle, so they can move something to earn an extra buck. Today, I think we're much more than just a side hustle. But again, all the tools built in Sky.Garden is really supporting the smaller merchants where they I think have one thing in common. So the pain point we identified was really the cash flow and access to stock. So not having to take away their stock and making sure that they would get paid the second they sold something. I think that's the problem Sky.Garden was to solve from day one. And we've built, our tech stack is built around a virtual wallet that we are giving any seller onboarding the platform, where they easily can upload their stock, online prices, do their own campaigns. They can bridge with their own customers. A lot of them are very digital savvy, but simply haven't been able to bridge their own communications via digital channels with fulfillment. And this is where we bridge the gap, and then make sure every time they have a sale, they can access the funds directly. One of our competitors today, what they did back in the days was, requesting to get their stock into a central warehouse, and then they wait 4 to 8 weeks before they would get reconciled where they actually sold something.
Okay. So you're shortening their time to payment from weeks to moments or days at least, or okay.
Yeah, minutes,
whatever. Yeah. So my first, I have many thoughts, but my first thought is one of the barriers you're trying to overcome is trust, right? You're trying to provide a trust layer that may not have been there. Could you talk about that a little bit and is that a process to win that trust with your merchants and the consumers, and what's that like?
Yeah, I think in an ultimate scenario, so what we really wanted to build to begin with was a Shopify for Africa solution.
I was going to ask you if you compare
Yeah,
yourself more to Shopify or Amazon.
exactly. So
Thank you for getting there before I asked that awkward question. Yeah.
No, it's this is because our focus all along has been to really provide great technology for the merchants, right? So we definitely see ourselves more as a Shopify kind of version where we then plug the distribution model directly into it. Because we have, again, was said before, we had to build some of the infrastructure which wasn't present, right? The marketplace is like that was the missing piece from a trust component. So we weren't able to build the Shopify model because people would never go and buy something of a smaller guy if they didn't know who he was. If you have a fundamental belief that you will get screwed over if you buy something online, unless someone or something protects you in the transaction, that would never fly. So for us, the marketplace, I hope one day we won't necessarily see a Sky.Garden marketplace. So this is purely having a brand behind the small guys to protect the transaction, and that's basically how we've dealt with the trust issue. So
where Shopify is essentially transparent to the consumer.
Exactly, and that would be the brand towards the consumer, right?
Okay, all right. So your merchants, again, there's a range, but there tend to be. It went from the side hustler to the more pure, more full-time online seller, but just a little more color on who they are, because are there a lot of, for example, you read a lot about people doing crafts and creating things like needing an outlet, but then there's other people who are just kind of doing like what people on Shopify do, which is you find goods and then you sell them online. It's just a pure commercial exercise. Is it the full spectrum on your platform of those types of sellers?
It is the full spectrum, but we definitely see those who move most volumes are also those who have access to some level of stock. It can either be home crafted, so we have quite a lot of Kenyan made both could be anything from crafted furniture to beauty products to yeah, stuff like that. Then we have quite a lot of smaller sellers, but not side hustles. But I don't know how well you know Nairobi, but there's a big
there.
area. Yeah, so CBD, so the Central Business District, where you have thousands of small retailers where they have access to some stock that they've imported, or either they have access to it through a distributor, or they've imported themselves from China, Middle East, or Europe. These guys before were fully dependent on footfall and competing against the next door neighbor with whatever they had of inventory. What they're using Sky.Garden for now is really to access the entire domestic market of Kenya.
Okay, so and it is within Kenya. This trade is all occurring within Kenya. This is not really an international play at this point.
Currently, yes, but part of the race is also to show that the model can cross borders.
We'll get to that in a second. I do want to ask about the raise. So okay, so and the other thing I'm curious about is what else does your platform enable? Because a lot of platforms, they start by helping them sell or helping them accept payments, and then adding on services on there to become more of a platform for the small business. Are you approaching that the same way? And talk about that a little bit.
Yes, we are. So building an infrastructure for sellers that are normally not banked is of course an interesting play for us. So we have thousands of smaller sellers now where we start look at their transaction history, what kind of goods they move, when they move it, and what kind of access to working capital that they also have. So financial products is of course something of interest now, looking at the seller side, but also on the consumer side of things. The wallet that we have can be used to pay utilities and a lot of other stuff there as well. So we also do see quite a lot of added service being brought into the platform to the consumers as well. Some things we have, but something is also in the cooking right now.
Okay. So you have a roadmap of services that can be sort of added on to build a bigger platform out. So yeah, I mean, I can see you helping, helping the small business again. Yeah, with the sort of managing the financial side of their business, accessing capital. Could even see like some marketing tools and things like that.
Exactly. So we have, just to mention a few of the products that we do have. So you can access marketing through loans, but also you can buy it directly and have us execute on the marketing, but at so much easier and at a much lower cost than if they had to go to Facebook, for example, and understand how to do digital marketing themselves.
Right.
Then we have a loan product where, based on your transaction history, you can loan and repay over time through the wallet. And we're looking into, of course, insurance as well, as we know what kind of inventory and stock that they have.
Right. Well, it is an advantage to sit on top of their transactions and the payment flow, that you really get a great sense of the credit worthiness of a business. So
exactly.
But same with any payments provider. Okay, so that's interesting. Now let's talk about the international. Well, let's talk about the raise, because I guess that leads to the international discussion. So you raised $4 million recently. I had one observation I kind of looked at the investors, and I had an observation that I don't know if it's valid or not. And it's that a lot of them were sort of, at least in terms of the language they use to describe their investment thesis, they tend to favor like impact-driven businesses or businesses that are solving a social need. So here, I have a few thoughts about that, and I talked to a lot of companies that would qualify as sort of impact-driven companies that have raised decent rounds of capital. Is that story important to raising money? That may sound a little bit cynical, but, I'm curious about that.
No, and I definitely understand the question, and I think I have to be mindful about how I answer that question.
That's fair. But you understand why I ask it.
I understand it.
Yeah.
No, and I think the short answer is yes.
Mm-hmm.
Um, so we also we also come out of, so the first race we did was also out of impact. We joined an impact accelerator as well after our seed round. And I think to us, so one thing is the story that you communicate, but another thing is actually also the self-belief that you know, the kind of company that you build and the kind of talent that you attract. And I think it's been a part of our core DNA since day one, that the entire empowerment of the entrepreneur is it's so strong that it's not something that's ever gonna make us diverse from the focus that we have. But then back to your question, I think you see especially in sub-Saharan Africa that it's almost impossible these days to raise early stage money without having a powerful impact story. So you need to solve some kind of SDG, or there are very few. There's very little high risk capital available if you don't have some kind of impact around your core business. But then, when post seed round and before Series A, you'll see a pretty massive vacuum.
And then it's like, what's the scale story?
Exactly, because then, sorry guys to those listening out there if you are VCs, but the impact story still has to be there, but it's a pure numbers game. So you're not gonna raise a dime if you can't show scale, and if you can't show a
pre-seed,
unit.
seed,
Exactly.
that's more impact driven. And I mean, that makes perfect sense. As you get into the A, B, C, D rounds, then it's like, what's the path to billion plus revenue?
That's it. And of course it makes sense,
but you have more impact the bigger you get, presumably. The reason I ask is my original thought when I started looking at this was, oh, that might be, if it's too earnest, maybe that the cold, ice water in the veins VCs would find that uninteresting. But I think what's happening, I think the story gets the business off the ground, but ultimately it has to prove itself as a scalable business. I think that's a fair way to look at it.
Yeah, absolutely.
Yeah. So let's talk about your, part of your, the raise is to support expansion internationally. You've identified, well, you're in Kenya. You've identified that I'm sorry, remind me, you have not moved into Uganda yet, right?
No, we have not. So we actually do see some activity on our platform in Uganda and Rwanda, although we haven't set up infrastructure there. So
okay, but the point is, right? you've identified Uganda, and then more sort of further down the road, Ghana and Nigeria as your roadmap for international expansion. What is this sort of exponentially more complicated if you're doing this across multiple borders? Talk about how much harder the business is when you have, or do you simply just set up shop uniquely in each market? But then what is the scale advantage of doing it that way? So talk about the smart way of doing international expansion and why it's so difficult.
Yeah, so I think again, our model is very asset light. Not owning our fleet and not having to touch the products is giving us a lot of advantages in different markets. Of course, we're looking at growth drivers where it's not necessarily us being on the ground either. But of course, there will be markets where we do need some physical footprint. We do need to set up customer service, set up a partnership with the different distribution networks, and of course set up the payment part. But the payment part is something we of course could do from anywhere, right? So I think all platforms have a platform dilemma. So you need a critical mass of inventory, and then you need to build a brand. A lot of the brand building doesn't have to be done locally. That's a more of a group or regional exercise. So this is
what do you do for brand building? I mean, do you have to do a lot of digital marketing? Talk about that just for a second.
Yeah, so far we've almost purely been doing digital marketing. But again, that limits us or limits our brand very much to be an urban play only, as there's also a clear correlation between urban consumers and marketing consumption on digital platforms.
Mm-hmm.
So part of the race now is also really to go into traditional media, which I thought I would never do with a digital platform.
Yeah.
But I am, and there's this saying that it ain't true until it's in TV. Apparently, a lot of the consumers don't trust us enough if we are a pure digital play, and that's part of it. And we'll also see the same going into new markets, that in order to be trusted, we need to bring some muscle in, and that's a marketing game.
So is it? I mean, is it even things like billboards? I mean, do you really get down into the nitty gritty of?
Yep. We actually did some billboards last year, and got. I think we divided the waters quite a lot. We made some things that we knew had worked out of Europe before, and the Kenyans, they half of the population or half of the people seeing it thought it was crap, and the other half thought it was great. So I think
As long as they all noticed, right?
that's I think the objective with all marketing. If we all agree that it's good, then it's bad to me. So
right. It has to create a response of some sort. Even a negative response is a response. Okay, so that's interesting. I guess I thought it had occurred to me that would be necessary, but I didn't realize how important it would be, especially because who knows you in Nigeria, right? I mean,
and I think this is also where we differ from Shopify, because the pure Shopify play, the individual brand is putting in their own efforts on the marketing part. But again, there you have trust to e-commerce in general. So right now, because we are very premature in e-commerce, we still need to change or drive behavioral change in these markets, and that's where it becomes a marketing play.
And the audience for this now, for digital, I mean, is digital marketing about driving merchant activity, or is it also about driving consumer activity? I'm guessing that the traditional is just pure brand awareness, but for digital, are you driving mainly merchant activity?
So digital is the lower part of the funnel. So that's where we see a much higher return on advertising when we convert, and that's both on the merchant side and on the consumer side. Okay. The brand building is just building attention, and there we then start using digital media to convert.
Okay, all right. So and that is primarily how you acquire customers on the platform. There's no other methodology. No, I assume we have sales or anything like that. Sorry.
I just said we have a lot of funny career tactics, of course, but
sure. But this doesn't sound like the kind of business that you have a sales force for. I don't think that makes any sense.
No.
Unless there was an enterprise level or something, which doesn't seem to be your model. Okay, I want to get into some broader questions about kind of running a business in Africa. I mean, the newsletter and the podcast, we like to talk about startups that focus on SMMEs, obviously in tech, to one degree or another. And there are certain common set of challenges, raising money, finding talent, logistics, there's a common set of challenges. But when you came into this, obviously you sort of admittedly were a little cold on understanding the African market. I'm sure you've learned a lot in a short time. What surprised you the most, sort of coming in? I mean, you must have had some warnings about some of the challenges, but what kind of caught you off guard about running a business in Africa?
So again, if we talk about some of the advantages, at least, of our model, again, we've safeguarded ourselves a lot against stuff like corruption and having the government come after us. We don't own anything. It's really hard to take us or any of our products hostage. Exactly. We have software. We have a data center in Amsterdam, and that's But when that's been, I think we spend way too much time on trying to safeguard us against that, because that's never really been an issue. And that actually, I think
you were more worried about it than you needed to be. Is what
exactly. I think what surprised us a lot was, when we started looking at the model and tried to figure out where the gaps were and how to solve it with tech. We started out by just seeing this incredible chaos, and really not, just thinking this would never be, well, how the hell are we ever gonna solve this chaos with tech, right?
Mm.
And then I think one day Christian, he told me, man, uh, just because we can't see it, I think it doesn't mean that it's not there, right? No, so I think we started speaking quite a lot about how things actually work if you just look closely enough, and really getting out of this mindset of saying that nothing worked, because a lot of things work. The local sellers, they always knew someone who could drive or take a product and send it from A to B and
Mm-hmm.
figure out how to get paid through M-Pesa, and all the stuff that we're working with now was happening just in some crazy complex ways, but they made it happen, right? So I
Mm-hmm.
think what has really, I think what where we had a breakthrough was when we finally understood that things are working. However complex things may seem, there's a lot of things working, and
Mm-hmm.
there's an enormous will from from the local guy or girl to succeed, and what they were really just needing was some tools that could streamline what they were
So your
doing.
merchants are doing a lot of the work to make this successful, is what you're saying.
Exactly.
Okay, that's fair. So again, I ask everyone this, and what are the sort of what are the things you would like to see improve? And that can be a number of things. That can be regulatory infrastructure. That can be in the sort of the capital system. Where are some things where you love to see some improvement, whether it's investment or just regulation or whatever it is that would make building your business easier.
I think, of course, it's also been taking some time for us to raise our capital, and I think the capital market is tough, but more and more VCs are gonna come. You see more and more big investments into the market now as well, and of course, there's going to be a dribble down effect to the ecosystem. And I'm actually I'm pretty sure that that there's a lot of good time coming ahead on the capital market. So I think what I'd really see, what I'm looking forward to is to start seeing tech ecosystems popping up where businesses like ours can really start taking advantage of great partnerships.
Mm-hmm.
It is tough for a lot of tech companies having to build everything from scratch, and the real acceleration is once we actually start connect all the dots between the different tech environments that we have, I think, on the continent. I think as soon once we get that right, you'll see a tech explosion as we saw in Asia.
Okay, and I don't know if you have any sense of, is that a year, 2 years, 3 years? I mean, I don't know if it's probably hard to say.
I think it's happening now, and in the very near future. Just the past 3 or 4 years we've been at it, it's crazy to see the amount of startups that that is just around and who succeed with some early stage funding. I think now it's getting some quality startups and quality companies to actually stabilize, to access some degree of funding where they also can think a bit longer term. We've spent a lot of time trying to partner with different startups where they didn't survive, which again, when these guys don't survive, then it's also impacting us, because
Right.
we've spent a lot of time on doing some cool things that never made it, right? And
Yeah.
that's part of the journey and part of
Sure.
any
I mean,
journey.
most startups fail, right? But
Yeah.
what do you think? What do you think are some of the common mistakes that are being? This may be universal, maybe it might be unique to Africa, but some of the common. One thing I keep hearing is that companies are getting a little too diluted too soon, because they're taking the money that they can get, and it's often at a low valuation and high stake, and that leaves very little room for future rounds. So that's one thing, a common thing I've heard about. And that may be not so much a mistake, but something that you just have no choice.
Yeah, I
But
think
what are the things you're
that's
seeing
the
that are
answer.
like leading to startups failing too early?
So I actually think you're onto something talking about the impacts investment before.
Hmm.
I think there are, and again, this is personally, I might step on someone's toes out there. I think there are too many,
That's okay. For me,
too
anyway.
many companies getting access to easy money too soon, and too little companies, good companies, getting access to proper VCs in the C to Series A round, right?
Okay.
Um,
So
but
come
but
up with
that,
an impact story, build a sort of a MP, minimally viable product, go raise a little bit of money, but there's not much there. That's too common, is what you're saying. I'm putting words
exactly.
in your mouth, but
No,
that's
no, but that's exactly what I'm saying basically.
okay.
It's it was incredibly easy to get access to the first money, and I see a lot of startups getting access to that, and then it becomes harder. But hey,
Hmm.
that's part of it, involvement.
That seems like a problem that works itself out over time, right? The
Exactly,
money gets
exactly.
smarter, and and eventually you have to have a little more substance in order to get that
Yeah,
funding.
but I think I don't know if what was I don't know why it's I think a lot of the companies, of course, they are simply lacking a structured ecosystem still. It's
Hmm.
getting there, with also getting some exits from other companies will also, get build the ecosystem up better.
Hmm.
There, but other from that, I don't know. I don't have a good answer actually.
No, that's fine. That's fine. The
Yeah.
other thing I hear a lot, and I think I mentioned it when we were chatting before we started recording, is that it's getting really hard to find good engineering talent, particularly engineering talent, but maybe talent generally. And one of the sort of culprits for that is kind of, we haven't talked much about COVID, and I tend not to obsess over COVID in these conversations, but one of the impacts was, international companies shut down their offices, and then suddenly the borders meant nothing, and an acceleration of pursuing talent, on a global basis. That's leading to higher prices of talent in Africa. Are you seeing that, and talk about how big an impact that's having, if it is?
But it's having a massive impact. So again, as a tech company, half of our staff is within our product team, and it's our biggest issue right now is to uh, so we can't compete on global rates at all. We have so our guys are being offered 2, 3, 4 times the amount that we can pay out. So we need to compete on other parameters, and we do lose some of our guys because it's gonna be hard from a 25-year-old to
Oh
say
no,
no to a
it'll take
4x
money,
increase,
right?
right?
Yeah,
Yeah.
yeah. I had a few thoughts. I was thinking about this actually today because I was writing something about it, and this may be a little naive, but I was thinking about a couple of things. One is the Google's certification program as a model in my head of the idea that does someone need a degree, or do they need aptitude and training, right? And maybe for certain jobs, yeah, you need that engineering degree, but for others, maybe you just need like aptitude and training. And there's an organization in South Africa called We Think Code that takes people who are basically from underserved areas, but use testing to identify the aptitude and then provide a training program to give them, qualified as full stack developers. And I'm wondering if this situation that's going on, that I hear from everyone I talk to, is going to lead to more investment in these kinds of programs that use non-traditional certification to create a
Mhm.
bigger talent pool. Um, that's not a thing that solves your problem tomorrow, right? But
No,
might be
it's
something that
definitely not. But I think it's something that we've seen for a while. I think Andela is still a good case on something that
right, exactly,
did
yeah, yeah.
work. And hey, our CTO, and he's the best CTO I've ever worked with. He's an educated butcher, right? So of course. but it's not solving the problem right now. There is quite a lot of talent, but it's just the couple of years we've been around, it's been so much harder to access it. And the pricing, there's not a big difference or discrepancy between hiring or getting a European engineer and a Kenyan engineer now. There still is.
Incredible.
There still
and that's,
is.
Yeah, great for the Kenyan engineers, right?
Yeah, exactly. But that actually, ends up being a completely different issue for a Kenyan company. So we also have customer success teams, and we have a marketing team, and an admin team as well, right?
Is this problem going into those areas as well, or is
it is because there's still transparency around what the engineers are earning now, right? So now you suddenly have a junior engineer earning the same as the head of customer success, and that's just creating completely different conflicts in the company, right? So yeah, wow. It's an interesting area.
Yeah. Okay. Well, I think we've I've used enough of your time, but really appreciate you coming on and chatting with us. There's a lot more I'm sure we could talk about, but
absolutely.
There's a limit.
If you're in Nairobi one day, then give me a call.
Absolutely. Well, we'll love to talk to you about participating in our events in the future, and look forward to talking further. And good luck with your business.
Amazing. Thanks, and have a good weekend.